Hello traders and welcome to another video review. Today is Friday, March 7th, 2025. NFP Payrolls Friday today. Let's take a look at the economic calendar. What do we have here? Of course, non-farm payrolls. Non-farm payrolls scheduled for release at 2:30, but let's start with the Asian session. Chinese data. Trade balance increases enormously from 104 billion to 170 billion. That's massive increase of trade balance in China. Exports down from 10 to 2.3% and imports even lower from 1% to minus 0.4%. Catastrophic almost. Data from China. What is going on here? We are all hoping that they are true, of course. Yes, now UK data, Halifax House Price Index, scheduled for release at 8 o'clock. At the same time, German factory orders are scheduled for release. ECB President Christine Lagarde to give a speech at 10:30, and German BUA President Joachim Nagel will give a speech at 10:30, and then Vice President Buch will give a speech at 10:40. Remember, Eurozone summit is still taking place. GDP from Eurozone at 11 o'clock. Mortgage rate from the UK scheduled for release at 11 o'clock together with the GDP. Quarterly and, of course, monthly GDP from Eurozone. Okay, that's about the London session. Now, New York session, very, very busy. Average hourly earnings, non-farm payrolls, participation rate, unemployment rate. All of this data are scheduled for release at 2:30. Data, of course, are from the US. Non-farm payrolls are expected to increase from 143,000 to 159,000, and the unemployment rate should stay at the same level of 4%. Employment change, unemployment change data from Canada scheduled for release at 2:30 as well. Speeches, Bank of England MPC member Mann. Speech starts at 4 o'clock. 15 minutes later, FOMC member Bowman will give a speech. 30 minutes later, FOMC member Williams will give a speech. Then 5 o'clock, Fed monetary policy report, and 1 hour 30 minutes later, Fed chair Jerome Powell to give a speech. Then US president will give a speech at 7:30. In the meantime, we got data from the oil recount, and that's about it. Very, very interesting and busy end of the week today, so please stay focused, stay vigilant. It might be super violent this Friday. Let's go to the charts. Euro-dollar 4-hour chart. Just recently we hit 61% Fibonacci retracement. We broke it and made a new high at 1.0854. We went down to 1.0766. So now this level will now act as the technical support, a temporary technical support for the bulls. 1.0766. There you go. Here you go. Okay. Now, from the upside, of course, we got the level of 1.0854, and that's temporary technical resistance. There you go. So, in the middle, 61% Fibonacci retracement. Please remember, if we move higher above the yesterday's high, that means the 61% would likely be abandoned. And this swing, let me just go to the daily, this swing will be retraced even more. 61% is the most popular, the strongest Fibonacci retracement level, so it will be quite interesting to see how the market will eventually break this level and where it goes. For now, we still have inside bar here on a daily time frame chart, and this looks like a shooting star pin bar-ish, dodgy-ish candlestick pattern. Look at this daily time frame chart. It is telling you that in this extremely overbought market conditions, there are bears here. Alright, so please be extra careful looking at this Euro-dollar daily time frame chart. That's only morning London session. We can still end this day completely different than big green candle. Alright, US dollar index again. US dollar index. Can I have a US dollar index, please? There you go. Daily time frame chart of the US dollar index is showing us a little strength of the US dollar across the board. But this, oh no, sorry, that was of course the wrong chart. Okay, not updated, not the wrong, but not updated chart. 61% hit again. Here on the US dollar index, low was made at the level of, this is the green bar, 103.73. We are approaching this level again. There are already extremely oversold market conditions, so any movement to the downside might be even more damaging for the bulls. Okay, S&P 500. It's all about America today. S&P 500, new local low, 5,711, just above the technical support at 5,694. We keep moving lower. Bounces and pullbacks are shallow, and very often the market is using this. Market participants are using these bounces to add new shorts, basically, right? So in this situation, right now, 5,769 is the technical resistance, and this level here, 5,800, is now the technical resistance as well. If we zoom out, what do we see? The previous low from January 15, 2025, that was already taken out. New lows were made, so this one is not relevant at all. And we are going back to 2024, and the next target is the November 2024 low, 5,694. It looks like the market really wants to test this level before any pullback is made. Gold. 4-hour time frame chart of gold is showing us a little of the consolidation here of the gold market, just around the 100 periods moving average, with the slightly positive momentum, 52 points only. So the gold is waiting for another trigger to continue the uptrend above the level of 2,954, right? So that was the swing high. Just below the gold, there is a very strong demand zone, short-term demand zone, obviously. The swing low, 2,832. So there is still a long way from the current level to the swing low. It looks like we have 1, 2, 3, 4, 5 ways to the upside, correction, and then the market might be ready to continue to the upside above the last all-time high. So the gold outlook, neutral to bullish. US dollar to the Japanese yen. Let me just switch to daily, because it looks like, yes, US dollar to the Japanese yen looks quite bearish. We broke below this technical support, which was a very important technical support here. So we broke below it. So let me just change this color to red, apparently. So now it is red, because it is technical resistance now, especially 148.66. New low was made yesterday. Momentum is negative. Bears are in control of the market. So there is still some room to the downside here, and if we enter this kind of a trend here for good, we can even test the lows of the September last year, 139.59. So please pay attention. Okay, nothing interesting is here. Pay attention to this market on the 4-hour time frame chart. Yeah, that's the same situation, and it looks like the 100 periods moving average is being used to open fresh short orders. So the sellers are coming every time the price is coming close to the 100 periods moving average. This is definition of the downtrend, at least in the short term. And last but not least, Bitcoin. So a little bit of the mess on the chart. Look at this candle. So a little bit to the upside, a little bit to the downside. We don't know what we want. We don't know what we're doing. Doesn't actually looks good. But from the bottom of this of this current low, 78,216, we might apply the local trend line. Let's leave it blue, because right now it looks like we might have some sort of the triangle building, or some sort of the bearish pennant is being built on the Bitcoin 4-hour time frame chart. Many times we've been testing up and down, back and forward, this supply zone. It used to be demand zone, right? So neither bulls nor bears want to leave this zone without a trace, without anything suspicious activity, right? So please stay focused, stay vigilant, as they are still trading around this zone, even with the pretty much neutral momentum of 49 points, right? So let's wait for the data. Let's leave the market right now to their own business, so the market participant can position themselves ahead of the data. And please notice that 5 minutes, 15 minutes after the NFP payrolls data are released will be very violent, very busy period for the market. So it might be useful to let the dust settle after the event is done, and then see what is actually going on the markets. That, of course, is about any market you want to basically trade, especially the one connected with US dollar. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.